The US is drowning in debt and demand for its treasuries is fading fast. But what if I told you there's a way for the government to slash interest payments, drive bond demand, and send Bitcoin to the moon, all at the same time? Welcome to BitBonds, a revolutionary idea that could change finance forever. Stick around because by the end of this video, you'll see why Bitcoin-backed bonds might be the biggest monetary shift in history.
Yeah, so to protect the US dollar and to protect our financial system, we need to have a strong demand for US treasuries. And you mentioned Tether and stablecoins provide some of that demand. But another way to increase demand is by offering what's called a BitBond. And so basically what a BitBond is, it's another form of treasury debt. So treasury issues out bills, notes, and bonds today. What a BitBond is, it's basically the same thing as a treasury bond, but there's a little kicker to it. And the kicker is you add a little bit of Bitcoin to the bond. And the reason you want to do that is you want to entice people. You want to create demand for that bond. And the way bonds and interest rates work, they're inversely related. So if the price of the bond goes up, if you create more demand for the bond and the price goes up, then the interest paid goes down. Mm-hmm. So if you create more demand for the bonds, then the US government doesn't have to pay as much as interest payments. They could offer a lower interest rate if there's more demand. Mm-hmm. And Michael Saylor figured this out with his convertible issues. So he's been issuing out debt at basically a 0% rate with no covenants because he has basically a Bitcoin kicker in there. And you could do the same thing with our treasury debt. And so the example I gave in the white paper is that if the US government issued out $100 billion worth of debt in a 10-year treasury bond, a BitBond, you could take 1% of that. So take 1 billion of the 100 billion, buy Bitcoin with that. At $100,000 of Bitcoin, that's 10,000 Bitcoin that buys. And so when that bond matures, the person, the company, or the owner, the eventual owner of that $100 billion worth of bonds, not only do they get the face value, they get the $100 billion back, but they also get the 10,000 Bitcoin that come along with that. And if they're getting that 10,000 Bitcoin, well, they're willing to accept less than the 4.5% interest rate that current 10-year bonds are paying. Maybe they'll accept 0% interest. Mm-hmm. And if they have the chance to get the 10,000 Bitcoin too. So it's a way to, like I said, create more demand, lower the interest rate that the government has to pay. And so, the goal is just try it. Issue out $100 billion worth of BitBonds with 1% of it backed by Bitcoin and test the market, see what the demand is. And because Michael Saylor has already tested this and he's getting 0% interest, I would think that a U.S. government backed, it's backed by the full faith and credit of the U.S. government. You're going to get your money back, the face value back, plus the pro rata Bitcoin. I think those would sell for 0% interest. And there's a chance they actually could sell above par value, above face value. So it actually generates cash flow to the Treasury. And so the goal is just to have the Treasury try it. And just, it's not very complicated to do. And, and if we can get 0% interest and get above face value, it basically bails out the debt that we've accumulated over the past, 30 or 40 years. And, it's just another way that Bitcoin helps things, helps people, helps the financial markets. People always ask me what is Bitcoin? And it's a lot of things. It's freedom technology. It's a way to protect your savings against inflation. It's a way to do financial transactions without the permission of a government or a bank. And this is just another use case for Bitcoin, is to back our treasury debt with it.
So there you have it. Now, I find it very interesting because I have actually broached this topic in one of my earlier videos. But as the Bitcoin is gradually enshrined into the global financial monetary system, there's bound to be more products, and we are seeing evidence and signs of this. And today is no exception. It's just another example. And there's going to be heaps of more type of financial products that is going to include a component of Bitcoin within it in order to substantially increase the rate of return on the financial performance of these financial products, with the aim of making money and to provide an answer to various problems out there, whether it's inflation, or whether it's currency debasement, currency devaluation, a destruction of our time and energy held in our cash deposits and in our cash bank accounts. Well, there's an answer to each and every one of those issues, and also against the excessive money printing, as we all know, that governments and central banks around the world are akin to, and have a bad habit of continuing to do that in order to satisfy the needs that they may have today, and also to address their ever increasing, ever growing national debt. So incorporating Bitcoin as a component feature of any type of financial products out there makes sense, because we all know that the trajectory and the exponential growth factor of Bitcoin, given its scarcity, there's only going to be 21 million Bitcoin ever to be circulated in the network. So why I found this BitBond, which is like an example type of a Bitcoin backed bond. Now let's go into a little bit more detail as to my takeaways for this rather interesting episode. Now, we all know that the US Treasury, as with every other national treasuries out there in the world, they all suffer weak demand of their currencies, and it's set to continue to decline in value over time. I think we can all agree that, and that is a problem, particularly when it comes to preserving our wealth held in cash deposits or in equities or indeed other bonds. So that is an issue. That sets the stage for the problem that we have. And even then, there are stablecoins like Tether, which is the leading stablecoin out there, the leading example type of fiat-backed stablecoin, which helps to boost demand of capital and liquidity into the market with the intention of opening up the floodgates in terms of reinvesting that into a crypto asset, predominantly is Bitcoin. So these stable coins, and I have another video that explains what they are, but in effect what they are is they're just an entry point from fiat into the digital asset realm, into the crypto industry realm, in order to buy other crypto tokens or digital assets. Bitcoin is a primary driver for that entry point, if you like. So the governments need a way, they need to find a way to make their bonds, their US Treasury bonds in this case, or any other national treasuries, the governments need to find a way to make their bonds issue more attractive to its investors, because we are seeing in the last years, and particularly it's been exacerbated by the COVID, well, there's a lot of investors who are really up to their eyeballs in investing in government issued bonds or debt, right? Because they know that the rate of return isn't at all attractive to their needs. So this is another driver as to why the national treasuries out there, particularly the US Treasury, because it has a humongous debt, they need to find a more enticing, more attractive way to repackage their government bonds offering by incorporating this Bitcoin component in order to yield a much larger or more attractive rate of return rather than just the nominal interest rate. Well, the answer, or one of the answers provided by this BitBond is, as I said, to incorporate a Bitcoin component into, let's say, a US Treasury government issued bond. And by doing that, you're kind of repositioning and making the government bond more attractive by providing a much higher, much more attractive rate of return at the end of the tenure of that bond. So when the bond matures, not only will the government will be in a position to pay back its loan to the investor who originally bought it, but not only that, they can actually make more money in terms of increasing, and this is where the clever aspect of the Bitcoin component comes into play. Given that the Bitcoin will provide a much greater return, it will actually significantly surpass the interest rate that the government would have to pay to the investor. They'll be able to cash in the difference of the nominal interest rate attached to the original bond versus the market value of the Bitcoin itself. And that difference, that accretive difference, is like the cash cow element for the governments to make money out of this repurposed or repackaged government bond, which is backed by this Bitcoin component. I think this is absolutely fantastic idea. And like I said at the very outset of today's video, we're going to be seeing many more of these type of financial ingenuities in terms of new financial products, and particularly where they're going to be incorporated within them the Bitcoin itself to make it more fancy, much more attractive in the eyes of investors. And Bitcoin backed bonds is actually one of those financial ingenuity products. And the reason why it's been mentioned here is this is yet again one of the financial ingenuities provided by Michael Saylor and his company. Now it's rebranded as Strategy. It used to be called MicroStrategy. Now it's been changed to Strategy. And what makes it uniquely interesting for the governments who are going to be buying into this quite rapidly, and that's how governments will be able to make money, and that's how governments could actually tackle parts of the problem of reducing their national debt. I think this is a fantastic idea, and this is yet again an example of a win-win situation for both the investors and the governments, actually making money as a result of bolting on this Bitcoin component into its government issued bonds, right? It's important because this year's catalyst is going to be the battle of the sovereigns, which means that the sovereign nation states will be competing with one another in order to incorporate their Bitcoin as a strategic reserve asset in their national holdings. And by doing that, they're going to, at some point, will have to take care of how to make their government bond products more attractive to its investors. And like I said, I think the only solution is this precise solution around offering the Bitcoin-backed bonds. So if you found today's episode interesting, please don't forget to hit the like button and to share the video to your friends and colleagues at work, and also to subscribe to my channel. I regularly post some interesting videos such as this, anything to do with Bitcoin, blockchain technology, and the future of finance. So I'll see you next time.